Hi, everybody, and welcome to another of the webinars in the series organised by Cystic Fibrosis Ireland. My name is Philip Watts, and I'm CEO of Cystic Fibrosis Ireland. And as you know, tonight's webinar is focusing on access to housing for people with cystic fibrosis. And you might remember that back in 2006, the United Nations brought in a convention on disabilities, which Ireland has ratified. And it declares that all people should have the opportunity to choose their place of residence and should not be obliged to live in particular living arrangements. Now, we know the reality for many young people in Ireland today is very different, not just for those with a disability or a long-term condition like CF, but the ambition to own a home or to rent a home is a major challenge for most people, and particularly young people, because of factors like cost and availability and income. There are, however, some additional challenges for those with CF that we hope to explore this evening. And we hope to give you a broad overview of not just the challenges, but perhaps some of the opportunities as well. And it's a complex issue, so we will come back to this issue again. We won't cover everything this evening because we know there's a very important football match on at 8 o'clock that I know some people will be watching. So I promise that we'll finish by 8 o'clock. Just some practical information. Tonight's webinar is being recorded, but if you want anything edited out, please let us know. And also to say, you don't feel you have to take notes. We're going to provide links. We're going to put this up as a podcast afterwards as well. So if you're looking for further information on subjects like mortgage protection insurance or the rights of tenants and landlords, etc., please be assured that we'll send that information on to you. So tonight's webinar is part of a series of initiatives that have emerged from our independent living report that was published in 2018, which showed that there's a wide mixture of accommodation choices for people with CF. Some are living at home, some are renting, and some people who have been able to access employment, or if their partner is working, have been able to purchase their homes as well. We also hope that tonight's webinar will contribute to a housing policy for people with disabilities, which is going to be brought out by the government next year. And so it's very much a two-way conversation. Please use the chat function, and thank you for everybody who has sent in questions to date. Please feel free to make further points or questions. And so without further ado, I'm going to introduce our panel. And I'd like to welcome Sam Byrne, Rory Tallon, Colin Priestley, who are going to be part of the panel this evening. And, just to say that we had expected Tom O'Neill, but he has come down with an illness and is not going to be here with us this evening. But I can assure you that Rory is our man in terms of things like mortgage protection insurance. So we will crack on, and I want to introduce our first speaker, who is Samantha Byrne. And Sam will be well known to you and many people as the Senior Services Coordinator in Cystic Fibrosis Ireland. And she previously worked for many years in Citizens Information. So she's very familiar with housing issues, not just for people with CF, but also for other broader issues as well. So Sam, I'll hand over to you. Your capable hands. Thank you.
Thanks very much, Philip. I'll just share my screen and just talk about what I'm going to talk to you about today. So A place to call home is the title of the webinar today. And I'm going to concentrate on things like local authority housing. So obviously not everybody's in a position where they can get a mortgage and buy a home privately. So my portion of the presentation will just be about people who are in that position. So what will we cover today? So I just briefly going to look at the results of the independent living survey that we did in 2017. I'm going to talk about the local authority housing list as it stands at the moment, approved housing bodies, which make up a huge amount of the bodies that actually offer homes to people who are on the local authority list. I'm going to talk about what is HAP. So that's the housing assistance payment, the cost rental scheme, the housing adaptation grant. I'll just give a nod to the Rebuilding Ireland home loan because I know that Colin is going to talk about that later on. The Help to Buy incentive scheme and the national housing strategy and what's going on there at the moment, and what CFI can do to help you in your quest to secure housing. So the results of the independent living survey, the particular housing section back in 2017, and these figures will have changed a little bit since then. Of the respondents to this particular question, 72 people owned their own house or apartment, but there were a significant amount of people living in private rented accommodation and again in local authority house or apartment. So I would imagine most of the people attending this webinar tonight are either in private rented accommodation or local authority and looking to move on from there. The question was asked, who do you live with? And most people answered either with parents or with partner, spouse and children. And I'll just go to the next one because I think that this is actually a lovely slide. We did a survey in 1998 and we asked the question, what percentage of people with CF are living with parents? And at the time, adults with CF, 74% of them were living with parents. But in 2017, that had gone down to 43%. And I would say with the advent of CFTR correctors and the drugs that are out now, that will go down even further. And people are looking to live independently. They're able to earn more money and they're looking to get into a position where they can house themselves. So that's why we've brought this about tonight. So firstly, the local authority housing list. Anybody who wants to access housing through an approved housing body, they're looking to get onto HAP, which I'll talk about later. You have to be on the local authority housing list. So as soon as you find yourself in that position, we would urge you to get on the list as soon as possible. The figures as of today are there are almost 69,000 households across all the 31 local authorities on the housing list, and 52% of those are single adult households. And obviously it's very hard to buy a home privately if you're a single adult household, because obviously you just can't borrow the money, and that's why that's the case. But only 5 to 10% of the planned social housing units are one bed. And this is causing a lot of anxiety for our members who live alone and want to continue to live alone. It's much harder to get a local authority property as a single person. So the question, what can you do to optimize your chances of an offer? So you can come to us, you can ask us for a letter of support to try and transfer onto the medical priority list. It just means that you will move up a little bit quicker. And then I would also urge you to contact your CF unit to look for a letter of support in that regard as well. And it makes so much sense to ask for a 2-bed property. So you can get an occupational therapist report to say that you need a 2-bed property, you need extra room for therapies and exercise. There are more 2-bed properties available, so you will just move up the list a little bit quicker. So most of our members that have actually been offered housing in the last year, it didn't really happen in 2020 because of COVID, but in the last few months, a huge amount of people have been offered places. And those places are run by approved housing bodies. So they would be the likes of TUA, Respond, Clúid. And they take people from the local authority housing list and offer them homes like that. So these are housing associations which are non-profit, and they provide rented housing for people and sometimes specialist housing. So it can be for older people or people with a particular disability. And they do that through building new homes, buying existing homes and leasing private houses. The other thing is HAP, Housing Assistance Payment. It used to be rent supplement. Rent supplement actually does still exist, but people who have a long-term housing need and are on the housing list can apply for a home using HAP. So it's a form of social housing support by local authorities. I won't go through the whole list because this will all be available on the website later, but you need to be on the local authority housing list in order to qualify for HAP. And you pay a contribution to the local authority, and the local authority pays the landlord directly. So while you're on that scheme of HAP, and you can be on it for 10 years while you're waiting for your local authority home, you're still technically on the housing list, but it's called the transfer waiting list. People worry that I'm off the housing list, I'm going to stop I'm not going to move up any further, but that's actually not the case. You will still continue to move up the list. So back in February 2021, the cost rental scheme was announced. And cost rental scheme is where an approved housing body, which were the AHBs I just spoke about, they buy properties directly from a builder, and they offer them to tenants at minimum 25% below market rate. And it's aimed at households on a moderate income. So these would be people who would not qualify for local authority housing and cannot afford a mortgage. So I'm not sure what they mean by moderate income at the moment, but it would be under €50,000 a year. And the tenant pays rent that only covers the cost of delivering the house and managing and maintaining the house. So yeah, sorry, they need to have an income of no more than 53,000 per annum. It's there, and not in receipt of any social welfare supports. And as I was putting this slide together today, I just went onto Twitter and I looked up cost rental schemes. And the very first scheme actually opened today in my area, which is Fingal County Council. And I think there are 25 homes in Balbriggan, and they basically Clúid Housing own them. And people can go onto their website from tomorrow morning and make an application to rent there. And this is going to be rolled out all across the country. Like there are amazing things going on around housing in the background. If people talk about the housing crisis, and indeed we are in crisis, but there are a huge amount of associations all pulling together to work on cooperative housing, the cost rental scheme, affordable housing. So there are positive things in the future, I really feel. Now, moving into a house on your own is not always an option for anybody, and independent living takes many forms. And independent living for you could mean staying in your family home, but having your own space within it. So you may have an area where you can work out, you have your own bathroom, and you have a nice, comfortable bedroom. So the housing adaptation scheme, it's open to most people to apply to, as long as the household income is under 60,000. And all you need is you apply through your own local authority. So if you live on Fingal, you go to Fingal County Council. Quote for the works, an application form. You have to supply evidence of tax clearance, and an occupational therapist report is excellent to have as well. Anybody that I know who's applied for this and has been successful has gone to them with a private occupational therapist report. They cost about €300. And again, I would urge you to look for a letter of support from ourselves and from your CF consultant. And if there's any other person in the home who has a disability, I would look for something from their consultant as well. So the Rebuilding Ireland Home Loan, Colm is going to talk to you about that. So I leave that to him. I'll leave the slide within the presentation if you want to look at it on the website afterwards. So there's another thing, it's the Help to Buy incentive and the enhanced Help to Buy scheme. So basically, if you sign a contract for a new house or draw down on a self-build mortgage between the 23rd of July last year or the 31st of December 2021, you can claim, the information is there, 10% of the purchase price of the property, 10% of the completion value of the self-build. So that's done through revenue.ie. You literally go online and apply that way. So, I mean, good news on the housing budget. This year, our housing budget is 3.3 billion. And, you know, they will put that, the plan is obviously to build 9,500 social homes for them to be funded. I really believe that the approved housing bodies are doing amazing work in this area, and the local authorities are giving people on their list to the housing associations, and they're being offered homes this way. So there's many different things. There's the new shared equity purchase scheme that they're talking about. It's a little bit like the shared ownership loans in the past, except the council would only own up to 20% of the value of your house, and you have an option to buy it out then later on. There's the cost rental scheme, which I spoke about, with the new scheme opening in Balbriggan. There's a Help to Buy scheme, the Rebuilding Ireland home loan, and the mortgage to rent. There are a lot of options out there, whether or not you want to go down the local authority route, or my colleague Rory is going to talk about private home ownership and how somebody goes about that in the next presentation. So the National Housing Strategy for persons with disabilities is being formed at the moment. So it will run from 2022 to 2027. And what I would say is, have your say, have your voice heard. If you go online, just I'll put the details up later on. You can put yourself forward as a case study and talk about your stumbling block to owning a home or to getting into a home, whether it be through the local authority or housing association. But they really will listen, and CFI are going to make an effort to get involved in this, into some kind of steering group. But the plans are being put in place to tackle housing quite aggressively over the next 5 years, from 2022 to 2027. And it's important that our voices are heard and that our members' voices are heard. So I would really urge people to go and fill out that questionnaire there. So what can we do? What can CFI do? We will be making a submission to the new National Housing Strategy for people with disabilities. We will continue to support members with letters of support in relation to social housing. I work very closely, as do Caroline and Rory, with the CF social workers. We can look at moving people onto the medical priority list, so they're not on the same waiting list for local authority housing as everybody else. We can signpost people to life insurance providers, such as Tom O'Neill, who is due to be here tonight, and that he can work directly with the person with CF, and Colin might be able to talk about him a little bit later as well. And just provide information on different housing options to members. So thank you very much for listening, and I'm going to pass you back to Philip. My contact details are there, Rory's contact and Caroline's. Thank you so much. Enjoy the rest of it. Thank you.
Thanks, Sam, and thanks for that fantastic presentation. I know there's a huge amount in there, and there's quite a few things that I didn't know about in terms of accessing supports for housing. And I think one of the key messages that you're saying there is really that there is so much happening at the minute, and some of which isn't really being flagged by the media or in social media. It's kind of a bit of a political fight going on at the minute, but there is incredible amount happening, including by housing associations and by local authorities. And actually, with the amount of money, I take by what you're saying is that there's a lot of potential for people here. And the more informed you are about what's out there, the better chance that you have. Would that be right, Sam?
Yeah, absolutely. That's it. Keep yourself informed. If you're in the market for housing, whether in whatever form, keep yourself informed. The information is out there, but give us a call as well. We will have the information. We'll keep on top of it, and we'll pass that on to you.
And a comment from Daniel McDonald is brilliant, Sam. So very much appreciated by everybody, I suspect. So we'll crack on to our next speaker, and again, someone you probably know very well. It's Rory Talon, who is a patient advocate for Cystic Fibrosis Ireland, and Rory has a particular interest in housing and around housing purchase, not only from his own experience, but also from the queries that have come in as well. And I know a lot of issues have come up in questions about mortgage protection insurance. So I know that's one of the issues that Rory will touch on. So Rory, you're very welcome, and over to you.
Thanks, Philip. Yeah. So what I'm going to do is just share my screen. Yeah. So I'm going to talk to you about two things. One is life insurance and mortgage protection insurance, and the difference between those and their place in they play in purchasing a home through mortgage facility. And Tom O'Neill from Blue Chair Financial Brokers, he was due to speak tonight on this issue. I've worked with Tom in referring people on to Tom, and he has helped people with CF in the past to secure life insurance products. So, but unfortunately, Tom had to cancel at short notice. So apologies on behalf of Tom. And the second slot that I'm going to do tonight is just run through very briefly, top level, about the mortgage application process and what it means. So the mortgage application process is really to purchase a home, private ownership, like securing a loan with a bank or lender. So a legal requirement in Ireland when taking out a mortgage product is that you must take out mortgage protection insurance. What that is, it's an insurance product that covers the cost of the mortgage if the policyholder were to die during the term of the mortgage. In a joint application between, a couple, both parties in the couple need to take out mortgage protection insurance. And what would happen then is, if let's say a male partner in a couple, they died during the life of the mortgage is cleared, and the other partner then isn't left with the responsibility of trying to pay a mortgage on their own. Okay, so there are various different types of mortgage protection products out there. The most affordable version, simplest version, is a reducing term. So if you have 200,000, 300,000 mortgage over a 20-year term, then what happens is the cost of the mortgage protection insurance will cover that mortgage for 20 years. But after about 10 years into the mortgage value is no longer 200,000. It's down to maybe half that or slightly more. So if one of the partners were to die, the mortgage protection policy is not paying out 200,000. It's paying whatever the cost of the mortgage remaining balance on the mortgage is at that point in time. That could be 100,000 or 120,000 or whatever, So that's a reducing term mortgage, most simple and probably most affordable version. There are more expensive versions that would pay out the full original cost of the mortgage, but as I said, they're more expensive products. So as I said, both parties in joint application would require mortgage protection insurance. And the situation in Ireland, and this is the question we get most commonly to CF Ireland, directly through phone calls, emails, and on social media is, I have CF, can I get a mortgage? And the answer to that is yes, you can get a mortgage, but probably no, or most likely no, that you can't get mortgage protection insurance. But the irony is that even though you can't get mortgage protection insurance, you may still be able to get a separate life insurance policy, the non-mortgage tied life insurance policy. So it's completely separate, nothing to do with mortgage. Okay, I'll explain a little bit more about that later. But so fact you can't get mortgage protection doesn't stop you getting a mortgage. There's a process in place where you can sign a waiver that exempts you from that legal requirement to mortgage protection insurance. That's what I want to speak about now. Okay, so the waiver process, and this is waiver, the legal requirement to take out mortgage protection insurance. There's 3 or 4 conditions that exempt you from this requirement. Okay, there's, you know, if you applied for a mortgage at age 50 or older, you don't need mortgage protection insurance. If it's not your primary residence, so you're taking a, you know, a sort of a business property, I don't think you need mortgage protection insurance. But where it's your primary residence, you do need mortgage protection insurance. Other exemptions are if you already have some sort of level of cover in place, some insurance product that's the equivalent of the mortgage term. So if you're taking out a 25-year term, you already have a 25-year insurance policy that would cover to the same cost or more than the mortgage you're taking out. So there are exemptions that probably most people with CF probably wouldn't be in a position to qualify for. But the one where people with CF can qualify for is on medical grounds. Sort of if you can't obtain a mortgage protection policy. So, but what you have to do is you have to prove that you can't obtain that. And the way you prove that you can't obtain it is you have to apply. And you have to apply to 3 different insurance providers in Ireland. And you need to go through the whole application process and not just a refusal over the phone. What you need to get is a refusal in writing to say, no, we can't have mortgage protection. Once you have those proofs in place, you can then, as part of your mortgage application to a bank, you can go to the bank and say, I can't get mortgage protection, but I can sign this waiver. The unfortunate position is in Ireland is that the bank or lender you're applying to, they're not legally obliged to accept your waiver. So the lender's discretion whether they accept your waiver or not. And if they accept a waiver, it really depends on the holistic financial position of the applicants, or sole applicant or joint applicants. Okay, I'll talk a little bit more about that. So if you proceed with the mortgage and the waiver, what happens is your partner, presuming they can get mortgage protection insurance, will take out mortgage protection insurance in their own name. And then during the course of a mortgage, the term of the mortgage, what would happen is that if you were to die during the term of the mortgage, and you don't have mortgage protection insurance, partner would be left to pay the cost of the mortgage repayments, no payout to your partner. In the flip side of that, if your partner were to die during the course of the mortgage and you survived your partner, that the mortgage would be cleared, your partner's mortgage protection policy. So you wouldn't be left with mortgage repayments. So that's the position. And then considerations for the waiver. I mentioned that the lender is not legally obliged to accept the waiver. So these are the considerations they would ask, that they would ask themselves to satisfy whether to proceed with you or not as a mortgage applicant, whether to accept your waiver. So they would determine who is the main earner. You know, is there mortgage protection in place on the main earner or on the, you know, so to look at these things, and it wouldn't be any one particular thing that they may decide against you. It would be a combination of all the things. Okay, so the party who can't get the mortgage protection cover, do they have anything else in place? And this is where life insurance, non-mortgage tied protection life insurance, plays the part, because it is possible to take out a separate life insurance policy. I'll come back to that. Okay, and they would also ask, if you can't get mortgage protection insurance, do you have anything in work? So a lot of people may not realize, those who are unemployed within a company, and very often in the larger companies, their remuneration package, the terms and conditions of their work, would actually have a product called a death in service benefit. What that is it's a product that if you die during your employment with that company, pays out a lump sum anywhere between 1, maybe up to 4 times the equivalent of your salary to your estate. So if you were working in a company that has that in place, effectively your mortgage would be practically covered if you were to die. So having that in place is a huge weight in your favor towards acceptance by a lender. Okay, so anyone in employment and considering a mortgage, definitely check out if your employment provides that cover or not. And also, do you have a pension in place? Do you have a strong pension fund in place that were you to die during the course of a mortgage, even though you don't have mortgage protection, that there is still some sort of financial lump sum that your partner in a joint application bail of to help clear down the mortgage. It may not pay all the mortgage, but it will go a considerable way to clearing a lot of the mortgage, so that the mortgage debt that remains on them as the mortgage payments would be very much reduced. So they're all the sort of considerations that a lender would analyze and consider whether, when they're making their decision whether or not to continue with you and accept your waiver. Okay, so life insurance. So non-mortgage tied life insurance is a completely separate life insurance product. It's not in any way related to your mortgage. Okay, so what that does is, same thing, it pays out to your estate on the death of you as the policy holder. Okay, so whether that's your partner or you leave a will and so on, outlining who you'd like to leave money to, but eventually that product would pay out on your death. Okay, so if you have such a product in place as you apply for a mortgage, even though you probably won't get mortgage protection insurance, you have this in place, it does, as I said, weigh hugely in your favor with the lender in terms of them considering you as a mortgage applicant. The difference in the products between mortgage protection insurance and life insurance is the mortgage protection is tied to the mortgage, in that it has to be the same term and value of the mortgage. Okay, and it most commonly reduces down with your mortgage. But a life insurance is a lump sum. Sure, you're insuring your life for a lump sum. So let's say you take out 100,000 euro cover. Okay, and that the insurance company might say, well, okay, for that level of cover, we'll charge you 65 euro per month. You might decide, well, that's really expensive, I can't afford that, and that's your decision. But if you can afford it, you have to consider holistically your partner, and if you have any dependents, if you have any children and so on, that if you were to die, consider what 100,000 would do for them. So your 65 euro per month payments, even though you'll never see that 65 euro, were to die during the course of your product, there's a lump sum paid out to your family. So that's where the place of the life insurance is. It's not, you can get a mortgage with a waiver to mortgage protection insurance without taking out life insurance. That is possible and has been done, but that's probably more feasible as a sole applicant if you don't have family dependents. Whereas if you do have a family, you probably want to provide for them in the case of your death, and that's where life insurance comes in. And because you have CF, and the reason most people with CF would be refused mortgage protection is because of the duration of the terms. A 20-year mortgage or a 25-year mortgage or 30-year mortgage. The actuarial data on survival for CF, to substantiate the case for mortgage protection insurance is poor. And I certainly believe personally that will change over time with the advent, the onset of the FTR modulators, that the population survivability, long-term survival data will increase. But at the moment, what insurance companies base their decisions on is actuarial data and population statistics and so on. And that doesn't speak in favor of CF at the moment. So that's why mortgage protection policy would tend to be refused, because of the length of the policy. Whereas life insurance, what they can do is, because it's not linked to a mortgage, it doesn't have to be 20 years. An insurance company might say, okay, well, we think 20 years is too risky for you, but we may be in a position to offer you a 10-year product or a 5-year product. Okay, so you might get life cover for 10 years or 5 years. And insurance companies in Ireland, while they might refuse you mortgage protected insurance, they might be prepared to give you offer you a life insurance product. You need to apply basically and see how that goes. Insurance is based on risk, and they load for the higher risk. So given that you do have CF, it does mean that any premium you would pay for a life insurance product compared to your partner being a healthy peer would be, multiples of what they would pay. So it might be 3, 4, 5 times more expensive than they would pay. So they might pay, say, 20 euro a month. You might be looking at paying 80 euro or 100 euro per month for some sort of equivalent level of cover. So a company in the UK called Pulse Insurance, okay? They have covered, they specialize in covering higher risk individuals, and they cover various categories of high risk, but they cover high risk medical conditions. And one of them is cystic fibrosis. And that's why we recommend them. And it was a bit dodgy in terms of Brexit, whether they could continue to trade here in Ireland, but they are still trading in Ireland. Whether that changes more long term because of Brexit, who knows? But at the moment, they're still licensed to trade in Ireland as such and cover people in Ireland. So a lot of people with CF who did decide to take out non-mortgage protection life insurance policy have taken one out, Pulse Insurance. Now, we do know that you may also get a life insurance policy from an Irish insurance provider. But as I speak to you, I'm not aware of anyone who's come forward to CF Ireland to tell us, to confirm that they have. But it is likely that you could get life insurance. And I did see some social media comments from, from people saying, that their parent works in an Irish insurance provider and they do provide insurance to CF. So, that's good news. It means you may be able to get life insurance, but if you can't get life insurance from an Irish insurer, you can certainly get it from Pulse Insurance. And Tom, who was supposed to be speaking on this tonight, these are his details. So he's a financial broker, and he has a good friend who has children with CF, and he came to us prepared to help people with CF, realizing that this would be a challenge for them. So he's been very helpful to a lot of people with CF in getting them a life insurance product as part, so that would weigh in their favor towards mortgage protection, not towards mortgage application. So that's it about life insurance, and you may have questions that I suppose we can take at the end of the evening. But I'll jump straight on to the slot that I was going to do originally anyway, which was just around the mortgage application process. For those of you who are considering purchasing a home and taking out a mortgage and haven't necessarily read up on it just yet, this is just a top level overview of that process and things you would need. So you're going to need a deposit, first of all. So there's loan to income rate thresholds and loan to variable loan to value thresholds set by the central bank. So for first time buyers, you need to have a minimum of a 10% deposit. And I think that's 20% home buyers. But so for a first time buyer, on a home of 300,000, you would need to have a minimum of 30,000 euro deposit. And so you'd need to prove that you have that finance in place. Then you need, if you already have a mortgage, or maybe your partner already has a mortgage and now you're going for a mortgage together or something, you would need a recent mortgage statement. Then you need to provide evidence of what the bank are looking for really here is your savings history, and whether you're responsible with your finances or irresponsible with your finances. They'll make the decision whether to grant you a mortgage loan based on how good at managing your money you are. So they want to see, do you have any outstanding credit debt, debt in terms of credit cards, other things. If you have any loans like car loans and so on, they would need to see statements of those. If you have other bank accounts like Revolut, you need to provide 6 months of statements, and it must be current. So it can't be 6 month statements from 2 years ago. It has to be dated within the last 4 weeks. You need to provide passport or driving license, proof of ID, and you also need to provide proof of your current residence, so a utility bill or a bank statement. And then you would need things like salary certs completed by your employer, that states what you earn. And you also need to provide your pay slips. If for anyone who does get bonuses, that might be part of your pay slip, or a recent pay slip, or if it's done on a yearly basis or on a sporadic basis that you don't get it every year, you might have to provide evidence of the type of bonus that you got in the past, maybe over the last 3 years or so. You also need a statement, a P60, a statement of your income over an entire year. And I think it was last year the P60s were phased out, and now you have an employment details summary. So that's especially important then from the bank's perspective if your monthly income over the last 3 payslips is not properly representative of what you might earn in the year, at least by seeing the whole year's statement of income, they know what you earn in a year. Your current accounts, again, and any savings statements products or any savings products you would have, you need to provide 6 months worth of statements. And as I said, any loan statements, if you have any, car loans or whatever, and that's all to give the bank evidence of you and your financial management and your own personal finances, how well you manage that or not. And then as you go through the journey of the mortgage, other things you will need in terms of the property, you'll need a building energy report, BER certificate. You'll need a bank, an evaluation of the property by an approved evaluator of the bank or one that the bank accepts. It has to be recent, no more than 6 months old. You would need an engineer or surveyor report. If you plan on the property that you're planning to purchase might need planning permission or renovation costs, you need to have a quote for those costs and planning permission if applicable. And then you will need to have a solicitor for the purpose of drawing down the mortgage. So the solicitor will take you through all the things they will require, and they have sets of legal documents that you need to sign, and they need to complete on your behalf and so on. If you're involved in an estate agent, they'll have their own process and their own sets of documents you need to provide to them. Then, of course, as part of the MOG, it's done after. Once you apply for a mortgage, if the bank decide to take you on, they will offer you a loan offer, and the whole mortgage protection insurance doesn't come into play at that point in time. They're offering you a provisional loan offer based on your finances. And then once they give you the loan offer, it's at that point in time when you want to draw down the mortgage that they refer you to their in-house sort of the insurance broker to sell you mortgage protection insurance. And it's only at that point in time that the whole issue of you not being able to get mortgage protection insurance will come into play. And that's when you discuss the waiver. And you may then have to go through the process of applying to different insurers to get your refusals that you can sign the waiver. So they'll have already provisionally offered you a mortgage subject to you get mortgage protection insurance. Once you explain to them the whole issue of not being offered mortgage protection insurance and that you are prepared to sign a waiver, they will then have to reconsider your application. They'll go up the line to more senior level managers and so on, whether they approve you or not. And as I said, whether they agree to continue with you or not is really dependent on your holistic financial position as a couple and your savings histories and your financial management. So that's it for me. It's just a very top level overview and a little bit of an explainer about mortgage protection insurance versus life insurance. Okay, back to you, Philip.
Thanks a million, Rory. Again, a huge amount to take in there. But just to remind everybody, we will be putting up links to Rory's presentation and his PowerPoint as well. So before we go to question and answers, I'm delighted to introduce Colm Priestley, who's joined us as well. And Colm has gone through the process of getting his own home, and he's just going to talk about some of the challenges and particular challenges around that. And he said he has no professional qualification in terms of media appearances, but Colm, we've great faith in you, and delighted to introduce you. And please let us know what your experience has been.
Okay, thanks, Philip. A lot of what Rory said actually would be relevant for what we did. We went through, just me and my wife, went through the Rebuilding Ireland home loan. That's the loan we got. Now, I probably don't know a hell of a lot about like what a sole applicant would do because we were joint applicants, but for the Rebuilding Ireland home loan, the specifications were that your joint income must not exceed 75,000 a year. The price of the home couldn't exceed 320,000 euro. Your maximum loan amount was 288,000. One major difference between the Rebuilding Ireland home loan and your average bank loan is that the amount you can borrow, the maximum amount you could borrow was 5 times your annual salary, as opposed to most banks is about 3.5. The reason for that, as far as I know, is because it's a fixed interest rate. So they're able to kind of just give you that little bit extra space, because whatever your repayments are on day one are what your repayment should be for the 30 years or 25 years of mortgage that you get. At the time, it was 2.25% over 30 years. I think that can change slightly at the moment, but it was a low enough interest rate. And to be eligible for it, you do need to have been refused by at least refused a mortgage by at least 2 banks, or receive an insufficient offer by 2 banks. So like in our case, 1 bank completely refused us. Most kind of gave us offers that they were, in effect, they were refusals, because they were never enough that you'd actually be able to buy a house with. But they were still offers, but like it might be like, I don't know, 80,000 euro or something. You're not going to buy a house with that. The whole process really, from say the first conversation we had with a bank to actually sitting in our house, was about 1.5 years. And obviously we were saving for deposit and stuff before that, but that's how long it took us. Hopefully with help like this, it might take a little bit less for other people, like what CFI are doing now. What I'm going to do is I'm going to just go over a brief timeline, with how we got on and what we did. So in July 2017, I had a conversation with TSB, which was my bank, basically to apply for a mortgage. They said with them, what I'd have to do is I'd have to use their life insurer, which is Irish Life and Permanent. And cystic fibrosis was on the decline list for them, so that was like that was a really quick refusal, basically. Then in October, we contacted AIB. They wouldn't allow me to sign a waiver, which meant they wouldn't allow my salary to be included in the calculations, which meant the offer we were going to get was never going to be enough. There was a scheme that the councils were running at the time, but it was out of date. This was before the Rebuilding Ireland one, so we spoke to Fingal. It turned out valuable because I made contact with people in the housing department, or whatever they're called. But again, the kind of mortgages they were offering were kind of recession time mortgages, when houses were, I don't know, they could nearly half the price they are now. So it wasn't that fruitful, really. We applied to KBC in October, and then in October 2017, I applied to Bank of Ireland, and this was probably the longest application process we went through, because we were given approval in principle with them, which meant we could go sale agreed on a house. We gave in all the bank statements, that was all fine. But as is often the case, I suppose, with CF, it kind of hung on the mortgage protection, and I was refused mortgage protection from AA, from Zurich, from basically everybody we applied with. And it was at that stage I'd heard about Pulse in the UK. So I applied through low.ie is the website. I don't know if they were basically an online broker that you could deal with for Pulse. I got approval in principle, and that's very, there's a lot of more process you have to go through before you have full approval. But I got approval with them for a 10-year life assurance for the amount that the house is worth, or for the amount that the mortgage is worth, so 288,000. And then I went back to Bank of Ireland with that, but it didn't work out. So we actually were sale agreed in the house. In October 2017, we had paid a booking deposit, and in the end, we were refused a mortgage, and we had to back out of the sale. I appealed that a couple of months later with Bank of Ireland, and asked them to get a a document to say that they had refused to offer me a mortgage, and they got a bit cagey about that. And I think you might find that in general with the banks, that they are a little bit cagey about issuing you a document that says, no, you can't get a mortgage. I don't know whether they think you'll go to the media. I don't know what it is. So in the end, they came back to us with an insufficient offer, but I was able to get that, I was able to get a document to that. So I was able to go to Fingal with that. With TSB as well, they just said that I was refused mortgage protection. So I was able, so they were my two documents. One was an insufficient offer, and the other was from TSB saying that from their chosen insurer, I was refused mortgage protection. So that was enough to go to Fingal with, who in the meantime, the Rebuilding Ireland Home Loan had been announced. So we kind of had everything in place already. So we basically, on the first day that opened, we had everything we needed. We had all the bank statements, we had all the forms, we had everything they needed. I think you needed tax certs or something as well from them. So that was February 2018. Then we had positive indications from Fingal that through the Pulse life insurance that I would be able to get a mortgage. It was far from guaranteed, but there was, but I had positive indications anyway. But before you could proceed any further, I had to go sale agreed in the house. So at that stage, then just turned to your standard kind of house hunting and bidding for houses and getting outbidded and looking at some places that really were terrible and some places that were great, but you were outbid on. And in the house that we have now, we actually were initially outbid on. Then the estate agent came back to us and said that the sale had fallen through, and did we want to stick to our old offer, which we did. So then we had to get back in contact with Fingal, say we got sale agreed, and we had to arrange a meeting with Fingal. Let me just see what I have here then. So basically, because our application was a bit unusual, I suppose, we had to make a proposal and pitch it to Fingal. Really, it didn't fit into their, to their kind of standard rules. There was a couple of differences, like they want you to take their mortgage protection out, but again, we were refused that. So I was lucky enough, I have income protection insurance through my job, which meant if I fall sick, like sick for long-term illness, basically, I'll still get 75% of my salary paid, and I'm permanent. So we were able to put that to Fingal, and I was able to put the 10-year life insurance policy I had with Pulse and basically pitch it to them. Both me and my wife were, and so they're permanent. So eventually we got approval. It took about 8 weeks, and from there, really, a lot of the stuff from that point, from say that's May, what is it? No, that was June. We moved in December, but a lot of what happened in between June and December is like really typical of buying a house in Ireland, even from talking to other people. So a lot of the there was a lot of difficulties from there, but it wasn't really CF related difficulties. It's just it's a really long, drawn out process, and solicitors are arguing with each other, and I don't know, your head will be done in. But we got there in the end. I don't know if there's any point in me going through all the various things with solicitors, really, but at different stages we were given ultimatums by the vendor saying, if you don't do this by a certain time, the deal is off. Then we do it by a certain time, and then they'd go quiet, and then the deal would be delayed and delayed and delayed, and then we had agreed a closing date, and then Fingal didn't release the check on time. It just goes on and on and on, and that is actually really standard for buying a house in Ireland. If anybody does want to contact me or ask any questions about it, or even to be a little bit more specific, you can. I'm sure if you just ask, if you contact CFI, they'll forward anything onto me. I don't know how many people here are already going through the process, the mortgage application process. I will say that we did I found it in particular, really, really tough emotionally. And if you're going, you're looking for mortgage protection and life insurance, and you know, you're getting refused all over the place, and you don't want to be the reason why your family can't get a house and all this. Like, it is really, really hard. It's genuinely really, really tough. But I don't know. I just hope everybody can get sorted in the end, and whatever it is, whether it's renting, whether it's buying or whatever. But yeah, you can contact me, definitely. I think that's me done.
Brilliant. Thank you so much, Colin. That was absolutely fantastic. And I think you were saying to me before that you didn't have much practice in doing these things before, but it certainly didn't show. I think RT might be recruiting you after this. You know, absolutely fantastic. And thank you so much too for your offer of providing support and advice. And just in the last few minutes that we have, I'd like to bring back Sam and Rory as well. And again, thank them both for their fantastic presentations. A couple of questions. One, Colm, thanks for sharing your experience. Colm, did you find the process draining? How did you keep your positivity throughout?
Well, I didn't keep positivity throughout, is the honest answer. It was, you know, it was really, really up and down. I wouldn't really say I was all that positive about it, but right, this could sound a little bit cliche here, right? But anybody here has CF, you kind of, in some ways, like, things can be a little bit difficult for you sometimes. You definitely have to find a lot of times the long way around getting to where you want to be, whether it takes 5 years to do a degree that other people get done in 3 years or whatever, right? It's just basically the same as that. It's the script for you is just a little bit. Actually, there almost is no script. You don't really know what way it's going to be. You just have to you just push. And actually, a lot of it isn't positive. You just keep doing it. And then hopefully it just works out in the end. I don't know. And like, I did find maybe a lot of things that the average, let's say, person without CF would drop into conversation, maybe would like irritate you slightly because it just wasn't the same situation for you. But I don't know, you just keep going. It's just like we do everything. Honestly, you just keep going.
Yeah, oh, thank you, Colm. But it's a very, very inspiring story. Just a question to Rory. How would a couple with illnesses who both cannot get MPI, mortgage protection insurance, affect a mortgage application?
Mm-hmm.
So yeah,
all the same considerations, whether or not they will continue with you as a couple, is really going to depend on what else you have financially, you know, in terms of savings and, like Colm said, income protection or anything, whatever you're on. If you're both on social supports and not working, I imagine it's almost impossible. But if you're both working and maybe have income protection, maybe you manage to take out a life insurance policy, probably still possible. But like Colm said, there is no script for everyone's scenarios. Almost everyone is individually assessed, and each application for mortgage will be individually analysed by the bank in terms of the ability for mortgage repayments on a more prolonged term. So if the illness is, you know, and they'll probably look in those scenarios at the, you know, trajectory or projections of those illnesses as well, in terms of likelihood on mortgage as well. So I'm not a banker, I'm not a financial broker, so I can't say yes or no that you would or wouldn't get mortgage in that scenario, but the bank will analyze everything. But the biggest things in your favor is prudence, you know, financial prudence, good savings history, that you have a deposit. And if that's been possible for you with your illnesses, then maybe the bank will accept you. If that's been possible for you because, you know, that you're both on social supports, low income household, or, you know, then it's going to be practically impossible probably to get a mortgage. That's just unfortunate.
And Rory, too, a question from Linda Foley. Hi, Linda. To say, what are the chances of a single person getting all the mortgage life insurance, or getting around all the mortgage life insurance obstacles? Very difficult, I would presume.
Single person. So we do, in our most recent edition of our Spectrum magazine, we have an example of a person who did get a mortgage loan as a sole applicant. So it is possible as a sole applicant with CF to qualify for mortgage. But again, it comes down on you as a holistically, your finances holistically to the bank about repayments. But then as a sole applicant, there's no family dependence. So, you know, the bank, you can make the argument that, well, if you die in the course of the mortgage, all the bank needs to do is sell the house, you know, or, you know, to recover costs, you know. So there's pros and cons to everything. As I said, everyone will be individually assessed and everything about you will be assessed by the bank. So to answer that question, and it is possible.
And a question that came in previously to tonight was, how can we lobby for adequate mortgage protection insurance in Ireland? It's really good that Pulse provides that, but that's a UK company. Why can that not be provided in Ireland? I suppose that's something that we'll have to campaign and lobby on, Rory.
Well, what I do want to say is, in terms of insurance, so Pulse do provide life insurance, but they don't provide mortgage protection insurance.
Okay.
So if the question is, why doesn't anyone else other than Pulse provide mortgage protection insurance? The answer is they don't provide mortgage protection insurance, but they do provide life insurance. And, you know, it may be possible for people with CF in Ireland to get life insurance with an Irish provider. Colin mentioned his experience there, that he went to 3 or 4 different insurers and he was refused a life insurance policy. So, like, we can't say that you will, but we can't say that you won't either. So make a distinction between mortgage protection and life insurance.
Insurance. Thanks for that, Rory. And a question here to either Rory or Colin. We are currently going through a broker. Do you think going through a broker is a good option, particularly for people with CF, because we're slightly more complicated? I mean, they're slightly more complicated. Yeah.
Well, I can take that, and if Colin, if you want to add to that after me, but we do advise, and anyone going for mortgages advise that you seek out the assistance and guidance and advice of an independent financial advisor. Whether you select a broker to help you through the mortgage application process is another thing you can do. So a financial advisor will do that for you as well. But an independent financial advisor, the service they would provide to you would be to look at your finances way in advance of going to a bank for a mortgage application. Get your finances in place to help you push savings strategy in place so that you can build up towards your deposit, to help you with budgeting and household budgeting, and to advise you on other things that you should have in place, like maybe income protection, like a pension fund or policy. You know, so a financial advisor will try get you into a good holistic financial shape and good financial management habits before you would ever apply to a mortgage. And then by the time you do apply to the mortgage, for the mortgage, you know, what the bank are looking for in terms of your financial responsibility of your own personal finances. Hopefully you tick all the boxes that the bank will be asking questions about. So that's where a financial advisor comes in. And as I said, you can also contract the service of a financial advisor to broker, act as a mediator between you and the bank in terms of the mortgage application process as well. But not necessarily, you can apply directly to the bank yourself for the mortgage. You don't need necessarily a broker for that, but they are very helpful in mediation and negotiating with the bank.
And a question here is, my husband has CF, but we haven't gone as far as looking for a mortgage, but we've applied for affordable housing. Does a person with CF have an advantage of actually getting a house in regards to the condition of the house we are in now? I think that's one for Sam.
Thanks, Philip. I'm finding it hard to understand the question, but if I'm correct, they're wondering if they have an advantage towards getting an affordable house over somebody who doesn't have CF. And I would say yes. And maybe if they have themselves on the local authority housing list, the council will be keen to get them off that housing list. So again, you could come to us for a letter of support and we can explain why it's important for you to get into a forever home. So yeah, you can just contact us if that's what you meant by the question. If not, you can just send us an email directly, and we can find out what the answer to that is.
Thanks a million, Sam. And an earlier comment that was sent into us is somebody who's is CF and is living in a mobile home, which can't be ideal for the winter time. And will that stand in their stead if they're trying to get support for
Yes.
accessing local authority or housing association housing?
Yeah,
Sam,
absolutely, because they're living in unfit accommodation and it's possibly cramped as well. So all that will go into their application form for local authority housing. And they can also contact us for a letter of support and we can put that point forward as well. So it will bring them, but basically if somebody's on the local authority or on the local authority list and wants to apply for the likes of HAP, they get more money towards their HAP than somebody who's not in what could be considered a homeless situation. If you're in unfit housing, you could nearly be classed as homeless. So you can go for somewhere that's slightly more expensive, yeah.
And Sam, another one for you. Do you know if rent supplement is still available for people in rented accommodation that don't accept HAP?
Yeah, well, not really, because it's down to the landlord whether they accept HAP, okay, and also rent supplement. Rent supplement is like the short-term version of HAP. So somebody who's going to need housing supports for up to a year would apply for rent supplement, but when it's a longer-term need, it's HAP. So it's a very similar situation, but just got a different name on it because one's long-term, one's short-term. So I would say it's unlikely that they would accept rent supplement if they won't accept HAP, unfortunately.
Yeah, okay. Listen, I'm very conscious of the time, and I suspect some people are already kind of glancing over the England-Denmark match. So we promised that we'd conclude at 8 o'clock, and I just want to say huge thanks to everybody. Comment from Anne McCarthy, which is a very positive note to end on. Hi, Anne. We went through the mortgage process and just got approved. It wasn't too difficult for us, and we were very lucky. So it shows you that some people can have very positive experience. But I think it's the challenge that Colm has outlined is probably the experience of most people. In fact, even without a long-term illness, the process of getting a mortgage can be the long and winding road, as the Beatles used to say. So just I see Katie Moore on there and Neil Murphy, and thank you so much. So lovely to hear from you. And I just want to finish by acknowledging all the contributions tonight. Sam, apologies from Tom, who couldn't be with us, from Rory and from Colm, and from Liz, who's been doing a lot of the work in the background, and of course to our webinar czar, our webinar magic person, that's Nuala Macaulay, who makes things run so smoothly. So listen, thank you so much. Elaine, I see there, it's so informative. Thanks so much. Lovely to hear from you, Sean, as well. Sean Boland, great to hear from you too. And we'll roll out more of these webinars as we go along, and we'll return to the housing issues. And I'm conscious that we probably need to look at the private rented sector a little bit more in depth. We've covered the public housing sector and home ownership. But thanks a million, everybody, and a really good evening to you, and enjoy whatever you're doing, watching the match or going to the garden or whatever, okay? And we'll talk to you soon, okay?